Morning, everybody.
Good morning. Henry, you got me on audio?
Yeah.
Good morning, everyone. How's everyone doing today? Happy Sunday. It is technically the first Sunday of 2024, so hopefully you guys have had a good start to your new year. We'll get started in just a minute. All righty. Let's see who we got with us today. Abdul, hello. Florine, hello. Franklin, hello. Is it Jed or Gad? Jed? I'm assuming it's Jed. Hello, hello. If I mispronounced your name, I'm sorry. Jeffrey, hello. Terry, hello. Father, hello. Kate just joined. Jed, yes. Okay. Nice to see everyone. Nice to see everyone. Oh, I am sore. Markets definitely have been moving.
Yeah, they sure have. Exciting first week.
Hello, hello, hello.
This is an election year, too, isn't it?
It is an election year.
We might have a pretty volatile, exciting year ahead. With price action.
Yes. Has anyone here ever traded an election year? Which means technically anyone that would have been trading in 2020, that was an election year. Election years are pretty crazy. And the markets, I remember back when, back in the, was it the 16? When Trump was in office, and he was on Twitter. And this was actually like before I knew a whole lot about, ICT concepts and stuff like that. But it is funny how it would actually line up if you go back and look at it. But every time Trump would tweet, market would do something. He'd have some run somewhere. And it was like every single time he tweeted. Now, granted, I don't think it has anything to do with the tweet. I just think it's ironic how they pair that up. We'll get started here in just a minute, guys. Good time for anybody else to come through. Actually, I do have to do something on my laptop really quick before we get started, so give me just a moment. Take just a second. Let's hear some New Year's resolutions. You guys got any resolutions? Doesn't have to be trading related. Spend 1 hour a day learning and reading. There you go. I like that. I actually just ordered a book, The Mental Game of Trading. I've heard chitter chatter about it being really, really good. So The Mental Game of Trading. Let me tell you who it's by. Hold on. It is by, here, I'll share my screen really quick. 1 second. Henry, can you co-host me? Oh, you already got it. Yeah. Okay, never mind. You're good. I will need the co-host to start though. I've heard it's really good though. I think the author of it is a mental coach with regards to he does not just trading, but he has several clients in the PGA in golf. He has several people that are big poker players, I guess. He's definitely a well-known person. So I'm excited to read that. I've got a whole bunch of books this year I want to read. Okay, let me just do this really quick, guys. I'm sorry about that. Alrighty. Let's get going. News this week. News this week. We have, let me share some screens. Yes, Jared Tindler. He was the one. Pretty light week, but we do have CPIs coming out on Thursday. Henry, is my screen sharing?
I'm muted. Yeah, you're good now.
Okay. Nothing on Monday, nothing on Tuesday. Wednesday, very light, just a 10-year bond auction at 1. And then Thursday, 8:30, we have core CPI month-on-month, regular CPI month-on-month, and yearly. Note the yearly too, right? Because some months you'll just have monthly. You want to note when you're getting a potential yearly CPI also, that Y over Y. That means it's a yearly release too. So you've got numbers releasing on a monthly basis, but then you also have a month or numbers releasing on yearly basis. So that when you're thinking of how, big a CPI could potentially be, stuff like that. Notice how down here on Friday, when we have our core PPIs and our regular PPIs, there is no yearly one, right? So we can expect it to, it's still going to be a volatile red folder event, but when you're looking at the magnitude of it, right, it's a lot less when you don't factor in or you're not having a yearly number being released. So on Thursday, obviously it's the bigger day of the week with regards to what news is being released. At 8:30, you've got the 3 CPIs being released and then the unemployment claims. Later in that day, you've got a 30-year bond auction. And then Friday, you have your core PPIs and regular PPIs at 8:30. So with regards to red folder news, everything is pre-equities open, which is good. To me, that's a good thing with regards to identifying a potential setup in and around that equities open, right? When you get that volatile move, don't think that you're going to miss the move because it's before the equities open. Have the mindset that the market's going to, what's the word I want to use? The market's going to do all of the damage prior to that. So therefore, hopefully, depending on what the chart looks like, you have a sense of direction of any opposing liquidity that was supposed to be in the market is now taken out due to this news event. And now the market should be trading, hopefully, in that direction that we want to see it. So that's something to keep in mind. Any questions on news before we get into anything else? Usually y'all are pretty good with news. Hopefully this is something that you guys, whether you write it down on a Sunday like today on your calendars, or every single morning when you know what days you're trading or you're going to be watching the markets, still go back, open it. It takes 2 seconds. Doesn't matter what news calendar you use. I use Forex Factory and I just filter just to orange and red news events. I don't like to have too much. I know exactly what days are good, where the big things are playing. Other than that, It's really it for news. Just make sure that you stay on top of news. That's something that I didn't quite take as seriously, and it is very crucial in your trading development that you know what days are having what news events, and you're focused, and you don't, you check it, you might check it on Sunday, and then you might not check it again for the rest of the week, and then you kind of forget, wait, was that CPI on Wednesday or Thursday? So make sure it's always up. I always have a tab open on my computer screen to make sure that I am ahead of the game and I'm not playing catch up with regards to, oh shoot, did we have a news event? Is it okay trading on news days? Yes, you want to trade on news days. There are news events that you do not want to trade though, right? That's going to be NFP, right? CPI, and potentially, depending on your experience, FOMC, right? Those are the three main ones that you want to stay away from with regards to trading or being in a trade the minute that that is released, especially on CPI. CPI is the biggest no-no, right? You do not want to have a trade in or be looking to press that button on Thursday at 8:30, right? Because that's an instant redelivery in price. That's where you get those big moves. So yes, as traders, we need volatility to thrive, right? That's kind of like our food. We need volatility, but too much volatility could hurt us. So yes, we want to be in and around red and orange news events, except for CPI, NFP, and potentially FOMC, depending on your experience. Actually, yes, I think Thursday and Friday should be good days to trade. Other than that, we will go ahead and get into some charts. DXY has been doing what we thought it was going to do. We'll start on a weekly. Right, so we had on Wednesday, if I can remember correctly, on our midweek review, we had pushed up into the start of this weekly SIBI. Zoom in a little bit. We had pushed up into this weekly SIBI, but we hadn't quite fully filled it yet. And I had the idea that we could potentially go a little bit higher and at least fill all of this. I wanted to see if we could fill all of this, because if you're looking on a monthly time frame, right, and I'll keep referring to this monthly time frame so it becomes a little bit more clear to y'all. Notice that we've been visiting this BISI multiple times, right? We visited once in February of last year. Then we visited in April and May of last year. And then we really dug deep into it in July and then had a very clear reaction back up into this higher time frame SIBI. We now then revisited it in December, and we're now off of it. But notice how we have yet to have any candle closure inside of it, right? That's the main thing I want you to get from this picture is there's been no candle closure. No candles have been willing. So out of the 1, 2, 3, 4, 5 candles that have visited this BISI, none have had the willingness to close inside of it. So to me, that shows that there is this underlying higher time frame bullish sentiment that is still potentially in this marketplace. With that being said, my eyes go up here to this potential SIBI, right? If we want to get somewhat extended to the upside, my eyes go here because I think that that's where the market would want to go. If it gets to this point, then we can revisit, but my eyes are kind of looking up here to see if this is where we might want to go. But it's a little far, so we need to go down onto a weekly and refine that and see where we're playing on the weekly. We have this order block. We noted that with the mean threshold. Notice how we were sensitive to that. And then obviously this weekly BISI that we have obviously fully filled, but now note the closure as well, right? We have yet to have, now candles have closed in this BISI, but no candle had closed below the consequent encroachment, right? So we're still looking at that closure and the behavior there. So price, even though it came all the way down here, it still had an unwillingness to close below this consequent encroachment, right? And if you can see the very next week, last week's candle, you can see where we made that low, right? Right when we opened, we touched the consequent encroachment, then we had that redelivery higher. Now we have fully filled the SIBI. Notice where we closed too. This is key too, right? Candle closure should be something, though, if there's two things that I really want you guys to take into your studies going into the first part of this year in your development is identifying and understanding candle closure. Why did price close and potentially open where it did? And time, right? Time, and we'll get into that later today. Time should be something that should be in the forefront of your studies. So notice how price closed right at the equilibrium of this price swing, right? From this high to this low, we pushed all the way up, we filled the SIBI, and we closed right at equilibrium, right? Right in the middle of the range. And Michael teaches us when we're in the middle of a specific price swing or range, we don't need to be too heavily sided on either bearish or bullish. We need to let price give us more data and understand where that is potentially wanting to trade. Now, for me, on a weekly time frame, I think that we could potentially notice how we did not close in this SIBI. We did not close above the consequent encroachment. We didn't close in it. So I think that to open the week, we could potentially have some form of retracement lower, right? There is price that has not been filled all the way back down to the last week of December's highs, right? This previous week's high. So if price wants to come, it could potentially go all the way down and rebalance this. That's something that I'm potentially looking for. But there's really not much more than that on a weekly that I'm really gaining here, right? I have to understand a little bit more. If we're also looking to on a weekly and you're still using this order block, notice how we closed above the open, right? We closed above the open of this candle. So if I pull this out, that's another area where price might not even want to come all the way down here. And we could very easily just make a low in and around this level and create a BISI, right? So I've got two areas on a weekly that I'm looking at. It is this previous week's high at 101.760, call it, but then also a little bit closer to where price is going to potentially open is going to be the open of this down close candle right here, which would be 102.288. So I'm curious to see where the market opens up in and around this level, and I'm going to be looking at that on lower time frames to see if we want to find support there and possibly go higher. Other than that, there's not too much I can gain from a weekly. So now when we go down to a daily, there's a lot more that is here, right? We can see on Friday we had a lot going on with regards to NFP. So we had talked about all of these premium arrays that were layered, right? We had a volume imbalance, we had a big SIBI, we have a breaker, right? We've got so many things here in that weekly SIBI. So there's a lot, I think we counted 5 premium arrays right here. Notice how we almost just had a big doji candle. We pushed all the way down into this BISI, right? And this inverted SIBI, which is really my main focus. And I had mentioned that on Wednesday to see if we used it as inversion. The reason why I'm potentially favoring this low could potentially hold is because of the way we inverted the SIBI, right? We traded through it. What should have been used as resistance was traded through, and now you can very clearly see it was used as support. And we closed at the equilibrium. Notice how we spiked all the way up here also. Why would I favor price going higher rather than lower? Well, the reason I see price going higher is because if you look at this volume imbalance, when you're dealing with volume imbalances, you want to make sure that candle bodies are the key within volume imbalances, right? You need to see candle body closure through both sides, up closure and down closure, to really even out this volume imbalance. So even though we did spike up through here, not only did we not fill the full SIBI right here, this is not fully traded through, right? You can see the opening between here. So in reality, you have a SIBI right here that is still left over. But there's also been no candle bodies that have traded through this volume imbalance, which shows me that we could still potentially find a reasoning to go higher, right? The way prices reacted on the SIBI as inversion, we've already filled some of this BISI, right? So the idea behind it is that we don't technically need to, although it can go lower, right? There's still some more areas, right? So if I have to clear some of this, let me clear some of this really quick. This is that weekly BISI. But now we've got an area where we could potentially go to. So if price does decide to go lower and take this low, right? We could come into here and potentially go higher. That's something that could potentially happen. Or you could also take the equilibrium of this wick, which happens to be the very top half of the SIBI, and price could very easily just come down into here and then go higher. Those are the two main areas that I'm looking at. And what's going to help guide me to potentially get to that point is if price does decide to come back higher, using the mean threshold or consequent encroachment of this wick, right? Once price does show a willingness on like a daily to close above this level, I'd like to see that be used as support and then run higher, at least to this area, right? So that's really where I am on dollar. I am neutral as to where we closed on a weekly time frame within the range, but because of what I see on the daily with this volume imbalance, with this leftover SIBI, and the way we inverted this SIBI right here, I see price going higher. But I'm going to obviously let price show its hand. We do not have any news on Monday. We do not have any news on Tuesday. So with that being said, and even on Wednesday, there's not a whole lot of news. I have time to let price do what it wants to do, show me at least 3 daily closures on what it could potentially do, and then on Thursday and Friday, potentially, hopefully capitalize. Any questions, comments, or concerns there on dollar? Does that make sense to everyone as to why I would be potentially looking for that? I have a reasoning as to why this low should hold, but I also understand why it could go lower, right? There's still unfilled business, unfinished business here. But I also want to notice how this daily candle right here, this would be the 2nd of 2024. Notice how this candle's low is so sensitive to that weekly BISI, right? That's where it left off, and then there was momentum, right? Displacement was formed there. So really, price, even though it could go lower, I would not want it to go any lower than this daily's low, with the idea that the liquidity that should be in the scope is Friday's high and or this leftover SIBI, right? We've got relative equal highs in here that we could potentially go towards, but I'm not focused on that right now. I'm focused more on where price is and how we react on Friday's price action, right? I think Friday's price action is key going into the first part of this week, just because of where the low was formed and where the high was formed, and how you have this candle that has these long wicks on either side. So what you can do is you can take the consequent encroachment of each wick, each side of the wick, right, the lower portion and the upper portion, and start to follow the daily closure, right? The odds of price going to one of these two levels is very high. So when they get to those levels, how is the daily closing, right? Are we touching it? Are we touching it and not closing and then going higher? Or if we do close below it, right? If we do get closure below it, that could potentially call for price to go a little bit lower and then potentially go higher. But my idea of what potentially could happen, gun to my head, we do form some low in and around this level. I'm not for certain whether or not it wants to hold Friday's low. Could take it if it wanted to and then go higher, or it could hold it and then go higher. But I do see, with regards to the main draw on liquidity going into this week, would be this week's high, or this previous week's high, set it in and around 103.1, right? I think that this high is the main draw on liquidity going into this week. So with that being the main forefront of my focus, I need to understand and be patient. If price trades lower, I need to view that as a retracement and start to see if and when we could potentially form a low, right? And when we form a low, what does that mean? Well, on lower time frames, you need to get something like this, right? You need to see something like this, right? Some form of opposing liquidity taken on lower time frames with a shift in market structure. And then from there, you can start to see, where does this occur? Where does this occur on lower time frames? Somewhere in here or somewhere in here, right? Looking for this on lower time frames to see if and when we could create that. When I see that, my eyes then go to this high. I'll look to see where ES and NQ are to see how that could potentially transpire. Because if price is going to go higher and we are not in a mixed market, if price goes higher on DX, Y, price should go lower on the indices. Any questions there before I give it off to Henry? Kate said there's also a monthly volume in the same area that SIBI. Yes. So actually what she is talking about, and I did note that, I think I forgot to mention it too. Me and Henry were talking about it. On a monthly, if you can see, this is what Kate is talking about. If you see this volume imbalance right here, same thing like we talked about on the daily with the volume imbalances, right? To even out and balance those volume imbalances, you need candle body closure through them, right? It needs to have a candle body go through them, right? So you can see right here, there was a volume imbalance right here. Noticed how we had to have up closure and down closure to balance this area, right? So same thing here, right? With the idea that we could potentially have up closure through there, right? We have to have up closure before we can get down closure because it's above us. So the first thing that should be traded through it is up closure. That's why I see price potentially going higher. Any questions, comments, concerns there? That's a good point out, Kate. I assume DXY was useful when trading USD Forex pairs, but never considered it when looking at trading indices. We'll definitely start to look at DXY now. Yes, you want to use it while, you want to use it when you're looking at indices too. That's why it's almost like me and Henry always, I always give Henry the indices and I always go over DXY, and it's something that we never miss because as you are studying indices and they get in certain points where you're not sure what they're going to do next, the dollar helps tremendously with regards to that. Now, there is one caveat, and that's when we go into a mixed market, right? A mixed market is when both of them are trading in the same direction. And that does not last forever, but you will see it multiple times throughout the year. When a market is in a mixed market and the dollar is trading in the same direction indices are, you have to wait for a crack in correlation. So it's almost like you have to sit on your hands and wait for the market to show its hand, right? So if dollar goes higher and indices go higher, you have to wait for one of them to clearly go lower to then identify direction. But when they are going in different directions, right? When dollar is going higher and indices are going lower, or vice versa, that's when you are in a clear sign of a trending market, right? So if dollar goes higher and indices go lower, I can see, okay, they're not correlated, which is what we want, which means that both markets are in specifically trending markets. Then you can start to identify the trend. So currently DXY not bullish nor bearish. To me, I'm neutral. I'm expecting price to go higher, but I'm not in one specific bias more than the other just because of the weekly, right? So when I go into the weekly, the reason why I'm not is because we're halfway, right? Price could go lower and could go higher, right? We haven't broken any structure that says we could go higher. And really we're looking to see a direction inside of a move. So until we get above potentially these highs, or with regards to direction, right? We did take a high, a high in here, but overall we're just playing within this leg. So my sense of higher time frame bias and trend doesn't really mean anything because I don't know whether or not we're going to make a lower low and or make a higher high. And I don't need to know that, right? I'm going to get a better sense of direction when I know how we play once we get up to this CIVI, or how we play going back, redelivering in this BISI, right? So I don't need to know a higher time frame direction yet because one, we're in the middle of a move, and until we get outside of this move, right? Until we get outside of this price swing, which would be below this low or above this high, until we do any of that, I don't have any clear sense of higher time frame direction, nor do I need it to be a profitable trader, right? I think that's the main focus, is that you don't need it to become a profitable trader. You just need to understand where price is going to currently go within the scope of 1 to 3 days. And from there, you can find profitable trade entries. So don't think too far outside the scope with the idea that, okay, well, I need to know if price is going to go higher in the next month or lower in the next month. I don't know what price is going to do in the next month, but I am trying to understand what price is going to do by the end of closing on Friday. And quite frankly, by the end of Friday, we might not get above or below either of these. So if that's the case, I need to understand, right? We're not closer to any of the two liquidities, right? If we were closer to this high, yes, I'd be a little bit more bullish. If we were closer to this low, I would be a little bit more bearish, but we're right in the middle. So really it's 50-50, and I understand that. So I need to just make sure that I'm neutral and make sure that price gives me more data to then be able to identify later in the week. After that, after we're 1, 2, 3 days into the week, which one are we closer to now? Are we closer to this one, or are we closer to this one come Thursday, Friday? Hopefully that answers your question. All good there before I give it over to Henry? Alrighty, Henry.
Okay. We'll get into the indices. Should be sharing now. There we go. All right. Okay, so we'll start with ES. Just like we've been talking about in the past couple of weeks, we're looking at these previous highs being revisited, right? The reason for that was, you'll see when we go down to a weekly chart, we were looking for overlapping PD arrays to trade. And so just while we start on the monthly chart, let's still note what is present here. We've got the monthly BISI below, which could act as a magnet to price if price is going to continue trading lower. This is the area to watch. We also have the previous, not the previous month, but the month before, the monthly high right here, which could act as an immediate rebound if prices to trade to there. This candle, the third candle, which formed this BISI, closed above the second candle, which tilts the hand slightly toward me to the likelihood of this being a breakaway gap for some period of time, not permanently, but it's possible to see a retracement into this area and then to continue higher, which is why I don't immediately look for this to trade. You have to look within the lower time frames and see what's occurring there. So from here, we can drop down to a weekly chart. And you can see this past week, we traded really nicely to the consequent encroachment, just tapped just below it here in this weekly BISI, and then came off back toward the highs. Also closed through this volume imbalance here. And when we're talking about the overlapping PD arrays, what we were looking at was, we had this BISI here on the weekly. Right there, between this candle's high and this candle's low, traded and closed right through that. And so when we get that, we look for the overlapping PD arrays to trade. And so we have the weekly BISI below, overlapping with this previous old high. And so you take that through there, and you can see how price trades nicely to that area, and then digs a bit deeper toward the consequent encroachment. So if you are looking for opportunities within here after you saw price trade and close below here, which you can see on the daily chart, nicely closing below and also creating a new SIBI with the creation of, or with the closure of this candle, then you could potentially identify shorting opportunities within here to take price down to not just here, but to the overlapping PD arrays here. So not to the high, but to where it overlaps with the old high, right there. And then, of course, taking partials right here and consequent encroachment. I'll jump back to the weekly chart real quick, see what else we can note here. Just like we talked about on DXY, sitting mostly at a neutral standpoint right now, given that we've now returned into those overlapping PD arrays and we're inside of a weekly BISI. We do have the discount array below being that monthly BISI. But if you look at how we closed within the weekly BISI, you can see that we tapped the consequent encroachment, had a really nice response there, and then closed up in the upper portion of the city, or of the BISI, excuse me. So that lends, it tilts the hand toward a neutral perspective for now, because we're about in the mid portion of this range if we look on a daily. So if we take our most energetic low to high and put the fib on it, you can see that we came right back into a discount, and then that's currently right about where we're sitting. So if you're looking at this weekly BISI as a discount array, you have the opportunity to move from a discount array to a premium array which could be the old weekly BISI up here. You also have the daily SIBI right here between this candle's low and this candle's high. And there's also the volume imbalance that was traded over and can be revisited as well. So you can move from a discount array up to a premium array, these areas. Or if we continue to see displacement lower, then we can work down toward, we can continue working lower toward discount arrays. So we have this volume imbalance here combined with the BISI. So you look at this whole area, and then we have the lower portion of the weekly BISI. And then if we're going to continue finding displacement through there, this is ultimately where price would be reaching toward, this monthly BISI below. So now really all I look for when I go into this next week is I'm approaching it from a neutral perspective. So I want to see what happens in the beginning part of the week to tilt the hand toward, are we going to go higher into these premium arrays, or are we going to continue working lower into deeper discount, which would be here, 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 and then the monthly immediate rebalance, which is here, and the monthly BISI below. And so all I do is look on the first couple of days of the week on my daily chart and on my 4-hour chart and see where is displacement continuing to occur. And you want to work from the highest time frames down to the lowest, because price is always going to be working toward the highest time frame area of liquidity or inefficiency. And so that's why we start with the monthly and the weekly chart, right? We got the monthly from down here. On the weekly chart, we can see we don't have a new SIBI formed yet, but it's possible that this next week could form a SIBI, right? Because if we get a candle that doesn't reach all the way up to this candle's low, we'd have a new SIBI, a new inefficiency right in here. And then that could be utilized to trade lower toward the monthly BISI. So we don't have one yet, so we drop down to the daily and we just see what's available here. We have this volume imbalance that could be revisited above, and we have the daily SIBI up here. So that's an area that price can trade to. And you also have the BISIs below. And so it's not totally clear on the daily yet, so I drop down to the 4-hour and see what exists there. So now we have on the 4-hour, this 4-hour SIBI, which price, the candle bodies are closing nicely below the consequent encroachment. So as we get into Monday and Tuesday, I see, do we get new displacement in the form of a SIBI toward the downside, down toward the sell side liquidity under this low and the volume imbalance and the lower portion of the weekly BISI? Or do we start seeing candle closure above this SIBI right here and creation of a new BISI, bullish fair value gap reaching up toward this area? If we see that, then I would look toward the daily SIBI up here. And remember, price doesn't have to reach all the way up here in order to provide a profitable trading opportunity. You can look at the premium arrays that exist before that and just use this as a magnet to price, essentially. So if you were to find the 4-hour creating a new BISI within here, and you could find a trade opportunity off of that, you can be taking partials up here, you can be taking partials in the 4-hour SIBIs in here, and use this as a terminus for your target. So really just looking to see, do we get closure and creation of a new BISI through this? Then we can look up toward this high. And if we get new SIBIs being created on the 4-hour, then I'd start looking toward this volume imbalance here, the low end of the weekly BISI, and then the monthly immediate rebalance there. And if you kind of look at this from a broader perspective, if we are going to see displacement continue lower, the likelihood of trading into the monthly BISI becomes significantly higher, because this becomes a pretty clear looking market maker sell model. You have the original consolidation in here, your accumulation, reaccumulation, and then your smart money reversal occurring up here when this high is purged, and then your low risk sell in here, that 4-hour SIBI that we talked about last week. You can see how price moved really nicely off of there. And then you can have your redistribution down toward the original consolidation, because there's sell side liquidity resting under these relative equal lows. So if you continue to see new displacement occurring lower, then my eye goes toward here. Does anyone have any questions here on ES? All good? Okay. All right, then we'll take a look at NASDAQ. Mostly the same ideas here on NASDAQ. We can see that the retracement has been quite a bit more significant on NASDAQ. If we start on the monthly chart, you can see we already got the immediate rebalance, which ES has not seen yet. So trading nicely to there and trading just shy of the consequent encroachment of this wick. There are still 24 days in the monthly candle, so we can see price continue to trade down toward the consequent encroachment here. And if it does dig deeper, then you have this wick to trade into, and of course the monthly BISI below. On the weekly chart, we were looking for the same thing as ES. So when we traded through the first weekly BISI up here, I'll mark that out so it's clear to see. Right there, trading through there, then we expect not just this BISI to trade, but the overlapping PD arrays to trade. So this high here is just a little bit higher than this high, which is why I'm using this one and not this one. We trade into the weekly BISI, and we trade all the way down to the overlapping PD arrays right here. So when price trades in here, and I'm looking for it to trade lower after we trade through this, I'm not just interested in this trading to the high right here, or even trading to the consequent encroachment. I want to see it trade all the way down to the overlapping PD arrays right here. And so from a weekly perspective, now we can see that price is traded down to those PD arrays, overlapping right there, closed through the consequent encroachment, which is a bit more bearish than what we're seeing on ES at the moment. And you can just look down below to what can be revisited down here. If price is going to continue to trade lower, we have that consequent encroachment of the monthly candle wick, and then we have the monthly BISI below. And if this area is going to be traded deeply into, then I would likely expect price to just trade all the way to the monthly BISI. So really, now we can just see that there's a tiny piece left of the weekly BISI that hasn't traded yet. So it's possible to see price trade there and then continue to work higher. But given where it's closed, if we're going to trade all the way down to this low, I'd probably expect that price is going to dig a bit deeper and work back toward the monthly BISI. There's no premium arrays to look to really above on the weekly chart yet, but note that we had this candle body closure here. So if the next weekly candle doesn't trade all the way to this candle's low, we'd have a new SIBI in here, which could then be utilized. Let's see, we get something like this. Then you can have price trade back up into there to the weekly SIBI and then work down toward the monthly BISI. That. So I drop down to a daily chart and we see what exists above. If we're looking at premium and discount again, I'm just going to remove this for a second, or I'll just utilize that. We take the most energetic low up to the high. You can see that we have traded down into a discount. So relatively neutral perspective again when we're looking at indices, because we've now traded from a premium into a discount. And so I want to see what's occurring at this point. We can see price return up into a premium rate and then work lower, or we can just see price continue to work off down into this area. Because from the higher perspective, if we're looking just at a monthly chart, and this being your dealing range, you can see we're still well in a premium. So it can make sense for price to work down into a discount. On the daily, we'll just note the premium arrays above. So you can see that on Friday, we failed to reach into this SIBI, which tilts the hand toward continued bearishness to me. The fact that we couldn't even reach all the way up into the SIBI. We did reach back into this volume imbalance right here, use that as inversion, and traded back lower into the overlapping PD arrays right there. But now as we get into this next week, you can see what we do have resting above still. So we have this daily SIBI up here, and we have this SIBI right here. So this is potentially an area that price can trade into and then continue to work lower if we are going to go lower, Or if you start seeing closure above this one, then I look to overlapping PD arrays again too. So just like we looked on the weekly chart, you can see here, this old low and this SIBI overlap together. So if you see candle body closure through this SIBI here, then you can likely expect price to continue toward overlapping PD arrays. So right here, where we have an old low overlapping with this SIBI right here. So if you see closure through here, then you can likely expect price to continue working up toward this area. If you don't see the closure through there, candle bodies stay within it or below it, then the likelihood is that we continue to trade down toward the low end of this BISI on the weekly chart, and then continue to work deeper toward the monthly BISI. I'll drop to the 4-hour really quick so you can see what's going on within here. Same idea that we were seeing on ES with the sell model, right? Your original consolidation in here, accumulation, reaccumulation, smart money reversal up here. And now we're getting nice displacement off of here. Here is that same 4-hour SIBI that we saw on ES. You can see NASDAQ has been significantly weaker, failing to even reach into that SIBI at all, and creating new displacement to the downside here and throughout here. I don't see any 4-hour SIBIs in here until up here. So first you'd have to reach to the daily, which is this red box right there. So there's the opportunity for price to retrace into this area and potentially up to here on the 4-hour, and then continue working lower. And like I said before, if you see closure through here on the daily, then we can expect price to trade through here. So really what I look for is just the same thing as ES, right? Where are we seeing the new displacement toward the start of the week? Are we seeing the 4-hour start to continue displacing lower, creating new SIBIs? Then you can expect the price will work down toward the sell side liquidity below here. Or if we trade up through here and create new BISI on the 4-hour, then we can expect price to trade back toward the overlapping PD arrays up here and potentially deeper into this inefficiency above. So not a whole lot of news at the start of the week. We use that as time to see how price is developing and get a better idea of what can occur throughout the later part of the week, where we do have news and volatility likely to enter the markets. Any questions here on NASDAQ? Feel free to come on the mic if you have something, or just put something in the chat. Everybody's good? Chad says all good. Axel, great breakdown. Thank you. Okay, well, sounds like we're all good. If you find any questions after we close out of this, that's fine. You can ask and we can pull it back up. Otherwise, we can move into our
training exercise. All right, training exercise. So we are back with training exercises. I know we've taken a couple weeks off of it. So what we figured it would be best for all parties is, because I know we have a lot of new folks here, and new year, why not restart everything back where we started it, which was at $100,000. So if you aren't familiar with the training exercises or what they are, how they work, we ask that you basically start a demo account on TradingView with $100,000. And each week we will give training exercises that focus on certain areas of trading. And, we ask that, as your own sole trader, do what you need to do, whether it's trading live funds or testing whatever it is. But then utilize this as a potential backfill on your study if you don't want to trade your live accounts or whatever the case is. This is something that I think it's super easy to participate in. And it highlights certain areas as the weeks go on of trading. And we always try to change it up and make sure that, you're getting a little different side or angle of trading in all of these different training exercises. So we figured now that we are in a new year, we're going to reset all of our accounts back to 100,000. So whether you were in drawdown or you were up, it does not matter. We can go ahead and reset them. I do suggest that you take a screenshot of your first one if you were if you participated in the one last year, you know, take a screenshot of your whole thing and just save it, right? So then when this one's done, you can see the comparison, right? I think that that's key. So don't just delete it and forget about it. Take a screenshot of it, remember it, and see where you were and see where you could potentially be. So everyone's going to restart at $100,000. The idea behind this specific exercise is mainly focused on time, something that I believe should be in the front of your mind as you develop this year. Time is more important than price. You're going to hear me say that over the next couple of weeks. You're going to hear me emphasize on time and time again, right? It's something that's so key that I don't think a lot of traders understand as much and take as seriously, but time is so crucial with regards to your trading, right? You can understand price, you can understand the entry models and the formats and all that stuff and the premium and discount arrays. You can go and watch all that stuff, but being able to submit to the time aspect of it is a whole different story. And I think you can gain so much more from your trading understanding that, because I know I did. So this week, you're only allowed to execute a trade in 2 20-minute time periods, otherwise known as the macros, right? You're either allowed to execute an entry at the 9:50 to 10:10 a.m. Eastern Standard Time or 10:50 to 11:10 a.m. Eastern Standard Time. If you do not see a specific entry model unfold during those times, simply do not trade. Right? Every day is open for trading. Time of day for entry is the only thing restricted this week. So you can trade any day you want, but your trade should only be executed within either the 9:50 to 10:10 a.m. Eastern Standard Time period, or if for whatever reason you don't see that unfold, you can then utilize the 10:50 to 11:10 a.m. Eastern Standard Time. So only those two, right? All account balances should be set to $100,000. It is up to the trader to calculate the contract and lot slash lot size. So really the goals for this week, very simply, just find an entry either in the 9:50 or 10:10 a.m. Eastern macro or the 10:50, 11 a.m. Eastern Standard Time macro. If you do not find any entry at all within these two things, do not trade. Do not force a trade. Just because it's Friday and you haven't seen a specific entry that you like on either of these times, and it's 10:50 on Friday and you haven't traded yet, you can go the whole week and not trade. That's fine. That's data. Use that, submit that, understand that. So then we could go in and say, hey, maybe you missed something, or maybe there just wasn't a trade, right? And if there's not a trade, why trade? So that's the main goal for this week, is to understand I'm only going to enter in between 9:50 to 10:10. If I don't see anything there, I'm going to utilize 10:50 to 11:10. If I don't see anything there, I'm done for the day, right? You only need to be really watching price with regards to finding an entry within 40 minutes of an entire day. It's either the 20 minutes in between 9:50 and 10:10 or the 20 minutes of 10:50 to 11:10, right? Trades are accepted all week. We only want 2 trades for the entire week traded. So if you first start, you're going to risk 0.5%. Obviously, no one's in profit or loss yet, so everyone's going to start out risking 0.5%. If you win your first trade, stop. If you go break even or lose your first trade, you can risk 0.25%, right? Don't really worry too much about this. I'll go in and edit this because this is not really, no one starts in drawdown. So really, it's only this first one that you're really looking at right here, right? As we go into the next week, we will add this, right? But no one is going to be in drawdown. So really, it's you either risk your first trade, you're risking 0.5%. If you win, stop. If you lose or go break even, you can take another trade at 0.25%, right? And then you're targeting a 4-hour or 1-hour liquidity pool or inefficiency for at least 5 handles on ES, 10 pips in Forex, 20 handles on NQ. We want you to move things to break even. We want you to use a stop loss always. You always have to have a stop loss, and make sure you identify that stuff. So some things that you should add in your journal when you submit it is how long was the trade? What was the size of the trade? What was the risk to reward that you were aiming for the trade? What was the time of day of the trade? What were some specific premium or discount arrays that you used for that trade? What was the open, right? I guess this was for a specific one, so I'll delete this one. You don't really need to specify the open that you used. What was the draw and liquidity that you were targeting? Where was your stop placement? Did you take any partials? If so, where and when? When did you go break even, right? And what were your emotions before, during, and after, right? Utilizing this is going to be, I think, key to understanding restricting yourself to only certain times of day to actually press the button, right? That's the main focus of this week. Knowing very clearly what you're looking for and trading in a time frame, in a time period that you're looking for. And if you don't see it, don't trade. Any questions, comments, or concerns on the exercise? And actually, while we're here, I'm actually going to go ahead and do this. 1 second. I'm going to edit this post really quick. We do not need this. I don't want anyone to get confused. Okay. So that is that. If no one has any questions there, and obviously if you have questions, if you don't know how to start a demo account on TradingView, reach out to myself or Henry, or just make a post in the social, and we can make sure that you understand how to do it. It's very easy, very simple. We do not want you to reset these either. So when you submit these, we want you to submit the trades that you took, your trade log, a chart markup, and we want to see what you end the week at, right? Whether it's below or above 100,000, it does not matter. That's not the main focus. We want you to maintain it and continue to post your progress, even if you're trending down or trending up. Do not be shy, be transparent, right? That's where you get growth. That's where you learn, and that's where we can help you, right? If you try to hide it and reset it and do all this stuff, at the end of the day, you're not going to get any growth out of it. You're just doing it to try to show others that you can do it, when in reality, you're not here to show others that you can do it. You're here to find areas of your trading that need to be filled, gaps that you have in your trading that need to be filled. And the only way we can fill those to the best of our ability are if you sit there and you be as transparent with us, right? This is a family-oriented community. We only want to see you do good. Do not be shy with regards to submitting these things, right? We're not going to always tell you the things that you want to hear. We're going to tell you the things that you need to hear, right? I'm not going to win every trade. I didn't on the last time. Henry didn't win every trade. I do them. Henry does them. There was not a single person that went the entire time last year. Out of all 16 assignments that we did, there wasn't a single person that came in every single week with a winner every time, right? There were weeks where some had losers, some had loser streaks, some had winners, some had winner streaks. That's beside the point. So hopefully you guys find value in this. I will say there's really nothing with regards to the community that inside the community, technically that's that stuff. But I do want to read something that I found online this week. So every week I'm constantly reading and doing stuff, and I always find stuff that is good, that I feel like is good for the community. And I read this on Twitter, and I think that this is good, so I'm going to share it, right? So let's say you're at a point in your trading where you have a clear strategy that you want to follow. You've backtested at least 500 trades, and you have at least a whole formula of 500 trades of data that you can reside on with regards to your strategy. You have at least studied or read some form of basic trading psychology literature, whether it was a book, a podcast, an audiobook, whatever. You've found something and started to study the idea behind trading psychology. And let's say you've been trading for 6 to 9 months, right? What do you do next, right? What do you do next? Well, you're almost there, right? You have everything you need to start your trading career and start making money. The next step is to take your skills to the live markets, where emotions are now going to get involved, right? Trading demo and the exercises that we do, there's one thing that's not there, and that's the live emotion of it, right? You can try to simulate it as much as you can, but emotions aren't really something you can truly simulate. So where do you go, right? Where do you go to start to get your emotions involved? Well, there's something that you should always start with, and it's called risking small, right? Whether you fund a personal account with $1,000, or you go get a funded account for the smallest amount that they offer, I'll at least have this example go for, let's say you put $1,000 in an account, or whatever your country's equivalent is. When you first start your serious live market experience, you want to risk no more than $10 per trade. I'll say it again. You want to risk no more than $10 per trade. I don't care what your background or net worth is. The rule is $10. At this stage, you are not a good trader yet. Starting with a considerable size or increasing it quickly is a common mistake that almost always leads to blown accounts, right? So just because of whatever your net worth is, or you think your experience is, when you try to start with whatever you consider a good size, or you increase it quickly, it is an almost underlying mistake that all traders utilize to blowing accounts. So you need to submit to the time with the idea that size will come with experience, and only come with experience. You have to earn the right to risk more. You have to earn the right to risk more, right? You don't just come in here and you do whatever you think it is. No, you earn it. You earn it over time by submitting to the idea that you need to gain experience, right? Because there's this thing that is not in the forefront of your mind, which is a psychological warfare that is had when you go into these markets live, right? The main goal of this low risk approach is to be able to map your psychological flaws, right? It's not that you don't have flaws, it's that you don't know what flaws you have, right? That could be your psychological flaws, conflicts, biases, and other issues that cause disproportionate emotional reactions, right? You have traumas. All of us on these calls have certain traumas that they have underlining from their history of just growing up or whatever the case is, and you don't know what bleeds through your trading. You have to figure out what emotions are bleeding through your trading. That's why you use a low risk approach with the idea that these flaws are going to bleed through your trading, and you need to identify that and have a tax that is not too high that's going to cause you to spiral. That's why the rule is $10. Right? There are two books that almost all traders probably read in and out throughout their journey. Well, one of them is Trading in the Zone by Mark Douglas. And then another one, which is the one that I haven't read yet and I'm going to read, and that's The Mental Game of Trading. Once you have a proper system to journal and map to correct your psychological issues, you'll then start improving as a trader, right? You have to go in it with the idea that you have to figure out what to fix and then fix it. Not everything's already been fixed, right? You have to identify what needs to be fixed, how to fix it, and then start fixing it. When you start to see 3 months of consistency along with less emotional outbursts, you then can start slightly increasing the risk to $20 a trade. $20 a trade, that's it? Really? Yes. Because trading is something you're not doing this to try to blow up, right? The whole mindset here is slowly but surely. If you want to take trading seriously, your goals need to reflect this mindset. Do not aim for financial independence in the first year. It will not happen. It will not happen. I can tell you right now, your financial independence will not come your first year trading. I'm sorry. If that's what you want, that's not what you're going to get. So you need to either swallow the pill or find something else to do, because it's not going to happen, right? Instead, aim for being able to pay for 1 month, one monthly bill. It could be your phone bill. It could be your utilities bill. It could be a small bill, a subscription. It could be your Netflix bill. That should be your goal. That should be the thing that's in the scope. 1 monthly bill. So hopefully that resonated with you. I don't know, we're all in different areas of our trading, but if you are still struggling with trading live and you don't know how to handle your psychological warfare, take it small, right? Whether you want to fund an account with $1,000 and start with $10 per trade always, after 3 months of consistency, go to 20 and then slowly build your way from there. Or obviously we have funded accounts, right? The goal is to then go and get a small funded account, stay within the risk parameters, and same thing, risk what you need is the smallest threshold to then pay 1 monthly bill. Not all your monthly bills, 1 monthly bill. Guess what? You pay 1 monthly bill. What's your goal the next month? Pay not another one, pay it again, right? Pay it again. Once you have 2 to 3 months of just paying that monthly bill, okay, go get 2. Now aim for 2. Now aim for 3. Now aim for 4. That's how you build it. That's how you're going to get to the point where trading doesn't feel like this emotional stress all the time, right? And it takes experience. It takes your body being able to subconsciously identify what emotions are being presented and how to respond responsibly, right? This is the year that you become mature in the market, right? That's market maturity, identifying that you're not going to get it all in 1 month. You're not going to get it all in 1 week. It's slow. It's surely going to happen, but you have to submit to the time prospect of it. That's my little rant for the day. Really, there's nothing much I have on my end. I've got a bunch of stuff that I'm doing outside of trading. Tomorrow, I start 75 hard. If you do not know what 75 hard is, It's basically a 75 mental and physical journey where you go 75 days, you do 2 workouts a day, you drink. There's a whole bunch of things that you do. And I put it upon myself to do it in the first part of the year because if I can have almost the first 75 days of my year hard, almost the hardest that they'll be, right? I can overcome almost anything else, right? There's not much that's going to happen to me over the span of the year that I can't get through if I got through this, right? So it's not 75 easy, it's 75 hard. If you're curious as to what it is, look it up. If you have something you want to try, I'd love for you to try it. I will be doing it and kind of documenting it as I go, so I'll keep you guys updated with it. But really, for that sake, I'm spending all of the day today, getting my environment in check, making sure that everything that I need, right? When you do something like this, and just like in trading, you need to have things easily acceptable, right? So like my gym bag, when I go to the gym at 5:30 in the morning, I need to make sure that my gym bag's packed. I need to make sure that I have all my laundry done. I don't want to have this mental clutter. I want to make sure that everything around my house and environment is straightened and cleaned up, so it's not something that I have to focus on. So when every single day comes, right, I'm focused on what I need to attack, and I don't have these outside things that are coming in. Oh, I need to do laundry. Oh, I need to do dishes. Oh, I got to do this. Oh, I got to do that. And another thing that I want to present to all of you guys too, that is aside from that, is diet, right? Your diet, right? Your second brain is your gut, right? And I think that a lot of times what I've found is when I'm eating healthy and I'm eating what I'm supposed to eat, my brain, my clarity is so much more clear. I'm constantly making decisions, but when I'm eating terribly and I'm not focused on what I'm eating or what I'm consuming, I find my clarity not all there. And so if there's one thing that you should look forward to outside of trading and should work on going into this next couple of months into the new year, is focus on what you're eating, right? What are you eating before you trade, right? And that's more important. But overall, what are you eating in general? But what are you eating before you trade? What is that preparation, right? What does Ismail do? What does Simone do? What does Terry do? What does Alan do? What does Shanza do? What does Ranjan do? What do you prepare like? What is that morning like before you go into the markets, right? What do you do? What do you read? Do you meditate? Do you eat? What do you drink? What do you do? Do you get your heart rate up? Do you go for a workout? What are those things that you do to put yourself in the most optimal position to thrive in the markets, make the correct decisions, right? Not be as emotionally involved, stuff like that. So that's something that I wanted to share with you guys. There's really not much right now. Obviously, we usually go till 12, but we didn't really have an exercise to go over. So going into next week, we'll start having exercises to go over, submissions to talk about. I really do hope that you guys, especially in this first part of the year, utilize the training exercises. It's something that I think is good when you don't feel as if you need to trade live right now. I am not trading live right now. I don't think I'll even trade live this week. I've slowly worked my way into it. It's not something until really the second week of February where I really start to dive in and go kind of wheels turning. I slowly make my way in. I don't care where the market goes. I don't care how far it goes. The market will always trade. So I'm kind of just gearing up, getting all of my things in order, crossing my T's, dotting my I's. Other than that, it's really it for me. Henry, you got anything?
No, that's it for me too. Just excited to get back into the swing of things, and everyone be safe and responsible this week. We are just getting into the new year, so no need to press things too hard. Take your time with things, and we'll see how this first training exercise of 2024 pans out. I'm excited to do some review next week.
All righty. Well, then that's it. Appreciate you guys. Enjoy your Sunday and enjoy the early part of your trading week, both inside the markets and outside of the markets. And you'll see us on Wednesday.
That's right. Take care, everyone.